Hey everyone, it's Nick with Us versus Herd. First off, I want to thank you so much for watching this video. If this is your first time here, we have a free options trading group. Hit the link below. If this is not your first time here and you still haven't joined the group, please join the group. And also, if you're new here, hit that subscribe button on our channel. We post new videos pretty much every day. But what I want to get into is defending a options position. And yesterday I did a video on the market being choppy, and with the market being so choppy, you're more likely going to have to defend some positions, or you're going to have to take some losses, or it's going to go against you. And watch that video I posted yesterday. Actually, we'll post a link below because this is kind of a continuation of it. And what I'm going to do here, I'm going to talk about using Alibaba as an example. And I traded Alibaba a couple days ago. I put a position on here when it was kind of flattening out. And I had the 180, 177.50 put spread. And I had that on, and I was up probably about 10%, 15% maybe at the most. And then it just dropped $13 in 2 days. So it went from 180 all the way down to 165 in 2 days. So that's $15. So $15 in 2 days, and I had that put spread on, and I was running out of time because I only had a few days left on it, and I really wasn't sure if we're going to get a bounce. The example that I'm going to use here is more for advanced options traders, not really for a beginner, because you can easily lose money with the strategy that I'm doing here. But the way that I did this position, the reason why I took another position is because Alibaba has been one of my top performers this year, and I knew that I could turn my loss around. So actually, because the market's been so choppy, I haven't been trading that big, so I lost $100. But it doesn't feel good to lose $100 or know that you were wrong on that trade. And it doesn't mean that maybe you were wrong; it's just maybe you just didn't have the timing right. And usually, when a stock, if you look at Alibaba's chart here, when it drops so much, you're going to have some rip up. So if you had the huge rip down here, and then we had some nice movement upwards here, we had some down movement here, and then we had some up movement here. So there's going to be a bounce. The nice thing about Alibaba over the past year, definitely been some nice two-sided action. So I knew that a $15 drop, $13 drop, it's going to have some two-sided action. So as it was dropping yesterday, I bought the let's filter this out a little bit here. Don't pay attention to these. These are some of my, I just put I put a cheap strangle on Alibaba with some of my gains here. But yesterday I bought Alibaba. I bought the call, the 172.50 call for $1.24. So I took a loss at open on my vertical put spread, and then I immediately opened a call, because I had a bullish position, then I opened another bullish position because it went against me. One mistake I know that a lot of people will do is they'll flip flop, and for me, from my experience, and what I like to do is I don't like to flip flop. If I have a position on something, let's say Alibaba, or it doesn't matter, whatever stock you're looking at, I don't try to flip, because if you lost once, you're most likely going to lose again when you flip sides. So what I do, I had the bullish position here, it went against me, so I put another bullish position on to get my money back. Now I didn't sell. The reason why I bought premium, I didn't sell premium again, is because next week they have earnings coming up. I didn't really want to sell any premium into earnings next week, because IV, depending on what the stock will do, I don't think IV for Alibaba was at 80%. It was already at 80. I didn't see it going much lower. So even if the stock didn't move, I feel like it was going to go against me, because IV could expand to 90 or 100, and that would mean that even though the pricing didn't move, that would mean I'm gonna be losing money, because as an option seller, when the pricing as an option seller, as the price of the option goes up, you lose money. So that's why I bought premium, because it was easier to control, and I felt like I wasn't going to lose a lot of money next week if this position went against me as well, mainly because of earnings coming up. And I didn't think there wasn't really going to be an IV crush. If anything, it's going to inflate, making the options going to be more expensive. So I took another position on. I took another bullish position on. So I bought it for $1.24, and this morning I sold it for $3.22. As you can see here, my market price, I actually put it $2.82, but the market on Alibaba went crazy this morning. I'm going to show you the movement was pretty crazy. And at open, when Yeah, it went all the way up to 174.87, and so the mid price was 282, but they actually gave me 322 because it was moving so quick. So when you're buying and selling options, especially at open, realize that it could get crazy. Always use a limit order, because if you don't use a limit order, let's say I wanted 282, I could have got filled for $2, $2.20, because it gets kind of crazy here. So always use a limit order when placing options trades. And I put that in 282, and they actually gave me they gave me $40 more, which is crazy. But we caught a huge up move. And the interesting thing was at open, the volatility really expanded, because even later in the day, I checked the option pricing around here. It was higher. It was like 175 or 174.80, about 60 to 80 cents higher than when I sold it. But the option price was still only like 280, 290, and I got 322, and I sold it around. I don't think it'll show me. Let's see. I sold it, 48 seconds in. I sold it 48 seconds into market open. So it was pretty. I think it was 174.25. So definitely took my profits, and I'm glad that I did, because now it went down to the 171 mark, 172.50 mark, and would have gave back all those gains. I think, what's that worth? What was that position worth at close? So I had 147. So if I held throughout the day, I would have only been up $20 instead of being up almost 200%. So when you're buying options, time is not your friend, because theta really eat into it, and due to the expiration being tomorrow, you don't want to play games. When you're up 100, 200%, you take the money. But I just want to do a quick video on how I put a defensive position on to kind of combat my losing position, and it came out a winner. So I lost 100, but I made 200 on that position. So, not saying that works out every time. You can lose twice if the stock goes down even more. I could have lost even more money, but I knew the chances were good because I've traded the stock many times before, and I know how it moves. And like I said before in other videos, every stock has its own personality, so you definitely get to understand how stocks move, either up or down, so you can get a good point of entry. So that's why I took the money, and that's why I put this position on, because I'm used to trading this. It's one of my top performers for the year. So if you have any questions, leave a comment below. If this video was of value to you, please hit the like button. I definitely would appreciate it, and subscribe to our channel.